welcome to BloombergQuint. You're watching the fine print. With 25 days to go for the goods and services tax regime to kick in, we now have the final rates for all categories of goods and services. And that gives businesses enough time to assess the impact on their pricing on one hand, but it also gives them an opportunity to lobby for better downward rates. Now, will that happen for the restaurant fraternity? Last week, over 5 lakh restaurants in the southern states of India staged a protest by shutting down for 12 hours, saying that the tax incidence once the GST regime kicks in will be very high for those restaurants. To get sense of what the rates mean for the restaurant industry, I'm joined today by Ashish Saxena, CEO of Chili's American Bar and Grill. Ashish, thank you for joining us on BloombergQuint. Before I come to impact on Chili's in your business, give me a sense of what the rates mean for the restaurant industry, and for the benefit of our viewers, let me quickly revise the incidence of rates, which is restaurants with a turnover of less than 50 lakh will be taxed at 5%, non-AC restaurants at 12%, AC restaurants at 18%, and restaurants in 5-star hotels at 28%. What do you make of the rates, Ashish?
So firstly, thank you for having me. As an industry, we support the GST regime, and we are, very, this is the right step by the government for the entire economy, and it will definitely help us. But we just feel that the industry, the government has missed incentivizing the industry by keeping these 4 structures, and there are 2 issues that we have with that. Firstly, having different structures within the same industry, that just creates confusion for compliance. And deters people from who are not compliant today to move into that compliant bucket. Second issue obviously is that the rate itself, which is high. We are probably one of the highest taxed restaurant industries in the world. India is much lower than the developed nations and the emerging nations also in terms of propensity to eat out. One of the reasons is the incidence of high taxes. So, if you're taxed at about 18-20%, there is the bulk of the bill, we get surprised by the taxes at the end. So, had the rate been a little lower, we would have given impetus to the industry to grow at a much faster pace, and we would have also seen more conversion happen from the unorganized sector to organized, where people started paying taxes because the rates are, reasonable and not very high. So, we would have liked a lower rate, but that's unfortunate that the government has not been able to give us a rate which we can improve the growth of the industry.
But in terms of, I think, the optics, Ashish, the bill now that has several categories of tax as of today, at least in terms of the optics, it will look better tomorrow, where you will have just one line item of tax, versus today where you have the VAT, the service tax, and Krishi Kalyan cess and all of that. Why do you say that this rate structure will disincentivize the unorganized sector to come into the organized sector?
So I'll take that into parts. So it's very nice to have a single tax on the bill, but as a consumer, we don't really care if the bill has 5 more items at the end. So it's not that simplicity.
Which is
doesn't
why I
really.
said the optics look good.
But even then, we are not clear yet on what the excise will be on the liquor part.
Right.
So you may still end up seeing 3 or 4 lines on the bill.
Okay.
So you have liquor in the restaurant, you'll have taxed separately from GST. It'll help, but we're not sure. So coming to the second part, I think one of the reasons why we have such a large unorganized sector, and 2/3 of our food services industry today is unorganized. If you refer to the NRI report, which Technopack and NRI had published, so 2/3 of the industry is unorganized. And why is that so? That's only because of the high incidence of taxes. Otherwise, what makes them to be not reporting their sales and not paying taxes as all the other businesses? If we kept a tax rate which was lower worldwide, that's been the phenomena that it increases compliance. The moment the tax rate is reasonable enough, there's not enough incentive for a businessman to cheat and not pay those taxes. So, that's what we feel would have driven more movement from unorganized to organized. But what rate we've got right now is pretty much same what we were paying earlier. It's a difference of only about a percentage point at most.
Okay, I'll come to the pricing in a bit. On the compliance part itself, you mentioned that it will deter again businesses in the unorganized sector to move to the organized sector. how will they be able to achieve it if you have to just, sort of hypotheticate it for me?
Sorry.
So we were chatting offline, right? Like where currently unorganized sector, most of them are probably not even covered in the taxation regime, and going forward, even under GST, people with 50 lakh turnover or less will be at 5%. Help me understand, what do you see as the challenge in the compliance part? Because to me it seems pretty okay, right? Like of a non-AC restaurant versus an AC restaurant, there should be a difference in the rate, right?
So I personally don't agree with that there should be a difference in rate for AC and non-AC. But I think the most interesting bit is the 50 lakh bucket. There'll be hardly any businesses today which are generating that kind of a revenue, which are reporting their sales and paying their taxes. Okay. These are all cash businesses. The shops, the street side shops, which are not paying any taxes anyways right now, and they will continue to do that. So having a rate for them is good on paper, but whether that will help them to start doing paying that 5% rate is questionable. But what it does, it creates more avenues for a smart businessman to figure out ways of how he can report his sales at below that 50 lakh bucket and still just pay 5% of these taxes. So remain competitive.
How would you be able to do that?
So businesses will find ways. I mean, they can split their restaurant into sections.
I'm not ideating here with you, but like just for illustration purposes, how do you imagine that kind of evasion can happen?
Yeah, so I need to be a tax expert to know whether this can really happen or not. But a restaurant can give you bills in 4 different names. So if it's generating 2 crores revenue over a year, it can do it in 4 company names and then show that it's 50 lakhs each. It's as simple as that. When we create structures and we create taxation which is different, we create these kind of loopholes where people can exploit it and try to get it. Had we had a single rate across all restaurants across India, it would have just made life simpler for compliance to happen at a broad scale, and even monitoring of that compliance would have been much easier.
Sure. In terms of pricing, Ashish, how do you see that eating out become expensive for customers? Because by one estimate, 70% of the inputs that you use in the industry, you won't get a credit for it. In terms of pricing, where do you see that going in the GST regime?
So we will charge the GST to the customer, like we've been doing right now in terms of VAT, and so whatever we've been getting offset for VAT, we'll continue to get that from a GST perspective. Some of those items are exempt, some of those are not exempt, so it's a mixed bag. But vegetables have always been that, so we won't see a price increase happening there. Like I said, there's a percentage and a half, 150 basis points of advantage only for the consumer, so the bill would go down by that much, and it doesn't really matter on a bill of $1,000 to have 15 rupees as discount.
No, that's true. You do have an alcohol section here. Because alcohol is currently out of GST, and some of the liquor companies have been saying that their cost is going to go up by 3 to 4%.
Right.
Because since they're out of the GST net, again, some of the inputs that they consume as part of or manufacturing liquor, they won't get the offset for it. Impact on the alcohol prices?
So we are expecting
sorry if I could butt in, even aerated drinks, right? Because that's a 28% plus 12% cess.
Yeah.
So that's in the highest category, and those are the usual mixers at your bar, aren't they?
Right. So we will see a increase in the alcohol prices. We've been already in talks with the companies. They are expecting a revision as soon as the GST is rolled out, because what they're saying is right. Their inputs which were not taxed earlier are now getting taxed much more, and they're not able to pass it on to us through that, so they'll pass it on through price increase. On the flip side, there might be commodities which might have a benefit as well, so that rates might go down. But yes, from a liquor perspective, you would see an increase happening, and we would pass that on to the consumer if we are able to. So
getting high becomes expensive. Ashish, help me understand that technology-wise, how much of a difference it is for you from today versus in the GST regime? Are processes going to get simpler or more difficult for you?
So I think to start with, it's going to become more difficult because we are in 5 states, so we'll have to file 15 returns every month, which is much more than what we were doing earlier. So from that perspective, work is definitely going to go up. But what is good about GST is the whole technology enablement of the network. So we are hoping that with our ERP, we'll be able to have a smooth transition and generate those returns in a much efficient manner.
Have you done any tests so far?
We are in the process of doing that, and so the ERP that we have, they are developing the GST module and getting that certified from EY. So hopefully, we get that going before 1st of July. We're hopeful.
And are any of your vendors not those who are already registered and will also need to make that transition?
Yeah, so a lot of the vendors have already started the process and they've sent out requests for information to us for registering us as their customers, and similarly we are doing the same with our vendors to get their information so that everything can be registered. Some have not done anything yet, so yeah, I think July will be an interesting month where we'll have a lot of ambiguity in terms of what's happening. I think one place where I'm unclear and I don't have a clear answer yet is what happens to capital projects which are passing through this phase. So there is which work started in April or May and will finish in June or July. How do you account for taxes for those?
So you mean the transition phase?
Right.
How does that get affected?
So you started work and you placed a PO in May, but you end up invoicing only in July or August when the project is complete. So how do you which rate do you use for use the GST rate or use the VAT rates which are there earlier? So it's a little ambiguous right now for me. I don't have an answer for it.
Okay, Ashish, thank you for joining us here on BloombergQuint and giving us a sense of what restaurant or eating out would mean under the GST regime. Food costs, as Ashish tells us, might go a little lower than the current bills, but alcohol might cost you a little more dearer in the GST regime. Thank you so much for watching.